Look, it's been a tough year for streaming stocks, and I think the massive move that Disney had last year, while it certainly had to do with the vaccines and the recovery in the consumer, it was primarily around the expectations around streaming, which went significantly better than the market expected. And this year, we've seen it from Netflix to Roku, and we've got Disney tonight. We're lapping last year's strength. Streaming growth has been pretty modest across the board this summer as people are watching less TV. And I think at the end of the day, that's what's held Disney stock back.
So let's talk about that, because streaming has been one of the biggest secular growth stories. Is it over? Is this a pause? Have we priced in already a lot of the growth, 3, 4, 5 years out?
No, we're not done at all. I mean, there's about 1 billion pay TV households globally outside of China. The vast majority of those are still very much early in this adoption of streaming. We've got a long way to go. I think the big question is not whether the consumer is going to adopt streaming, but who are the companies that are going to win that battle? How many of them will survive and scale? And we certainly have confidence that over the long term, one of those will be Disney.
How does ESPN fit into the overall Disney equation? And specifically, how does it fit into their streaming strategy?
Yeah, so ESPN, which, if you go back a decade, was sort of why people were bullish on Disney. Then it quickly became why people were bearish on Disney with cord cutting. It's sort of fallen off of people's radar screens, despite being an enormous business for them still. And in our last report published about a month ago, we actually raised our ESPN Plus estimates. In fact, they're pacing, in our view, ahead of their long-term ESPN Plus streaming guidance. Mm-hmm. So the good news is that in the US, the all Disney bundle, Disney Plus, Hulu, ESPN Plus, we think that's in about 50 million, or has the opportunity to be in about 50 million households in the US over time. And ESPN's been a nice story there. I think the question is, can you make money streaming sports? They have a massive profit pool on the linear side, but can they transition to streaming? And I guess the good news is they're off to a very good start scaling the sub base. And having secured the NFL Monday Night Football rights for many, many years, they've got a lot of the content flexibility that they need. Now they got to execute.
Sure. So, Ben, let's talk about this evening and what people are expecting with all these streaming concerns. I guess you could argue baked in. Does that set a low bar, or what are the different metrics that you think are going to be really important?
Yeah, I think the expectations are for about 110, 111 million Disney Plus subscribers as of the end of June 30th. I think people were late in earnings. This is one of the last companies to report this cycle. So it's not going to be a surprise that it didn't grow faster than that. And as we look forward, there's a couple of things that are important in the September quarter, including the return of the Indian Premier League. That's a cricket tournament later this quarter. That's important to the Indian subscriber base. They're launching in Latin America with some sports IP. So we need those things to continue to move along and for COVID not to disrupt them to help. And then on the theme park side, we had Comcast report not too long ago. They saw attendance in Orlando and per capita spending in the June quarter already back to 2019 levels. So the expectations for parks is that they should be strong. And frankly, if there's some uneasiness about Delta, I don't think it's going to matter to the stock. I think people are able to look beyond that.
Shepard Smith here. Thanks for watching CNBC on YouTube.